let's welcome on board our next set of guests. We've got Mr. Anand Thandan, independent analyst, being joined by Mr. Rajesh Bose, senior technical analyst of My Advisor Alpha. Gentlemen, good afternoon and thank you so much for your time. Anand, let's begin with you. You know, amid a market like this where we've seen choppiness for a second straight day, you've still got some specks of green coming in from pharma, IT. To some extent, you've got some parts of financials that are participating. How are you looking at this theme that defensives are once again coming back to the green, and you've got some other sectors like realty, metal, defense, they are all under pressure? Do you believe that this trend is here to stay, at least for as long as the market continues to be sideways?
Sideways market, you expect to see sector rotation as the primary theme. That's pretty much what we seem to be seeing right now. There is, though I think the earnings for this quarter have been somewhat decent. In fact, there have been some few positive surprises from the consumption side, especially autos and auto ancillaries, plus perhaps some of the FMCG as well. For the most part, the rest of the market was already anticipated that they will do well. So, for example, engineering and kind of companies, for example, were already expected to do well and have delivered accordingly. Which means that leadership still remains a problem. There is no clear sector which one can expect will do very well going forward, and therefore rotation will be likely continuing. As you mentioned, pharma, etc. While there are some things that actually India has a fairly good position in, there is also now that the color that is coming through of what happens 2 years out, and that will change the kind of positioning for some of the companies. But pretty much otherwise, export-oriented businesses should continue to do reasonably well, barring IT. And the domestic side, the consumption, as I said, has been a little better than anticipated.
Anand, hi, great having you. Rajesh, I'll come to you in just a minute. Anand, I wonder how you're looking at the entire consumption basket. I mean, you spoke a little bit about auto, but there's also QSR out there, which has done, much better than expected, even though these companies are still largely loss-making, the largest ones still to come out with numbers. But give us a sense, is the tide turning? Is the worst over likely? And, do these companies now turn profitable at some point in this cycle?
Well, I don't know whether they will turn profitable or not in this cycle, but there is definitely, for the first time after many quarters, we are beginning to see same-store sales growth picking up, and that's an encouraging sign. Also, we are entering the phase of the year where the second half is usually better for consumption anyway because of the set of festivals and the overall number of holidays, etc. So overall, I think QSR space may actually benefit from all of that going forward. One of the major issues with this space has been the fact that the valuations have been overstretched compared to the kind of growth. So to some extent, that has now got corrected. Net, as I said, from a consumption theme, I think QSR probably has reached its bottom. How quickly it will rise is another question.
Watching out for that, because this quarter you've got a very good set of numbers from Sapphire, Devyani, Westlife, and we've got Jubilant also later in the week, so we're going to be watching out for that. Rajesh, we'll come to you. Thanks for waiting by. Give us your sense on how you're looking at the charts for the broader end of the market. We understand that Nifty and Nifty Bank are slightly under pressure, but even between this mid-cap and the small-cap indexes, you've got a reshuffle of leadership coming in on an everyday basis. How is the broader market shaping up on the charts?
Hi, afternoon, and thank you for having me on your show. So the broader view remains of sector rotation as just we highlighted. If we see for the Nifty and Bank Nifty, they are placed at a crucial resistance level, and they are struggling to cross those levels. And in fact, we are seeing that the short-term support levels have been broken today, and market may remain in a consolidation phase. But some sectors like auto, IT, they have been outperforming in last few weeks, and the kind of structure they are placed at a strong daily and weekly chart structure. We expect this outperformance to continue. Even if we see mid cap and small cap, they are trading flat and are showing relative strength as compared to the benchmark indexes. So stock specific and sector specific would be the approach in the coming week.
What would those sectors be? Let's start with that, Rajesh.
So as I highlighted, IT and auto remains our topic,
IT
and
auto.
along with that, yeah, and along with that, if you see capital market space such as BSE, MCX, CDSL, even those are showing traction and possibly the kind of base formation which we have seen in the last few sessions. These counters can show traction from here onwards.
Okay, understood. And since we are speaking of IT, brokerages have remained largely positive on Info Edge after a strong first quarter, citing better execution, accelerating recruitment billings, and improving margins. They see further upside from AI-led products, premium hiring, and operating leverage. That stock is continuing to gain for a second straight day after posting very good set of numbers on the back of a thumbs up coming in from brokerages. And Mitali is joining us with a roundup of all of these brokerage verdicts on the stock. Mitali.
Right, so we see that InfoEdge has been in focus in today's trading session after delivering a very strong set of numbers for quarter 1 FY27. And if you see, the brokerages are also quite constructive on the stock, with 3 brokerages giving a buy rating to the stock and Motilal Oswal being neutral. And the target prices range between 1250 to 1520 rupees. Now, the brokerages, the broad consensus is that the improving execution, the better margins for this quarter, as well as the strong recruitment billings are driving this positive outlook on the stock. Although a broad-based recovery in hiring is still awaited going forward as well. Also, recruitment, that remains the key bright spot for the company, with underlying billings growing accelerated at around 15 to 18%, led by GCC, as well as the technology hiring led by products and higher ARPO as well. Premium hiring has performed even better, which has grown by nearly 25 to 30 odd percentage, while Naukri's B2C business has grown by 35%, supported by better paid conversions as well as self-serve adoption by the company. At 99 acres, the billings have rebounded, with brokerages seeing lower competitive intensity and also improving margins. Although the pace of revenue growth, that still remains a watch point. Meanwhile, InfoEdge's new initiatives are also gaining traction. AI Rex has around 10,000 free trial clients and across 700 paid users as well, while Talent Pulse, Job Hair, 99 Shots and Naukri Pro, all these are also quietly scaling up. So overall, brokerages see better cost control across the company, operating leverage, premiumization, as well as the AI-led products supporting the earnings growth. And yes, you can see a positive momentum on the stock as well.
Absolutely positive momentum over there. Thanks, Mitali, for that. 6.5% uptick coming in on InfoEdge right now. Rajesh, other than InfoEdge, since you did say that you're liking IT at the moment, month to date, in the last 10 days or so of this month, you've already seen a 21% run up in Coforge, a 20% jump in LTM. TCS itself is up 18% in the last 10 days alone. Further upside visible on the charts from here?
Definitely, we are strongly bullish on the IT space, and we sense that this move has just started. If you see the long-term chart for the IT basket, I mean, during the July month, we have seen a bullish engulfing pattern on a multi-year low, and this kind of formation generally leads to a strong follow-up move. And we are seeing a majority heavyweight IT packs crossing above key averages after a long time. So we expect this move to continue. But having said that, since we have already seen some traction in the near term, this should be considered as a buying opportunity. And in the next few months, we expect the IT space to extend its northward move.
Recall having a conversation with you with regard to IT. Where do you sit on in terms of the argument? Anand, that's for you on IT.
Okay. On on my views on IT, I think it continues to remain the same. It's at best a hope trade. It had fallen off a cliff, so therefore it is, bounce was due tactically. Therefore, you might want to play it. I see nothing changed in the fundamentals. It remains fairly weak. So we are not talking about InfoEdge kind of companies here, which are not really IT, which are indirectly affected by IT or recruitment. But I'm talking about real IT services companies. If you want to look at IT services companies, why bother about India at all? Look at Accenture, go buy that. It is 1.2 times sales. It is trading at 14 PE, which is perhaps less than what most of the Indian IT companies are trading, and it will continue to at least grow in double digits. Has a much better, consulting business. So I don't see any excitement in the Indian IT services space other than trying to trade it.
That's your view on IT. But shifting focus then, Maharashtra's FDA has suspended the food license of Blink Commerce, the entity operating Blinkit for its Malad West dark store. The action follows an August 7 inspection that found severe hygiene violations, including heavy cockroach infestation, expired and damaged food products, improper storage and poor waste management. Times Network's Paras Dama is joining us with an on-ground report.
It's been few months where FDA Maharashtra is continuously raiding places where there are hygiene problems. There have been raids on famous restaurants and eateries where there are hygiene problem and rules are not being followed properly. Now on 7th August there was a raid conducted by Maharashtra FDA at a Malad Blinkit godown store where we are right now standing over here. There were many hygiene problem which was found. With that there were expiry date products which was there inside this very store. This is a store from where many people order the product, and from here the product goes to the customer. With that, when FDA raided this very place, there were cockroaches and rats which was found inside the baskets of storage of fruits and vegetables. With that, now the license of this very place of Blinkit store in Malad West has been suspended by the Food and Drugs Department. When there were the raid was conducted over here, there were many flaws which was also found. There were many hygiene problems which was also found inside the store, and acting on this very raid, the license of this Blinkit store has been suspended by the Maharashtra FDA. Now the operations of this very store has been closed for now, and it will be very interesting to see how FDA will work on this entire scene from here.
Okay. All right. Thank you for that. And let me switch focus. Plenty of buzzers, and you're seeing some very good moves coming. There's Finolex Cables. The stock is up 15% on the back of numbers. Anand, surprisingly, despite the raw material price inflation, we've seen good numbers coming in from cables and wires companies. Pretty much most of them have surprised on the upside. KEI's numbers were strong, so is Finolex. Polycabs weren't too bad either. RR Cable was also fabulous. Give us your sense on this entire space. It seems to be heating up. There seems to be some upside even in terms of margins.
Everything in terms of power has actually been doing well, given the kind of growth we are seeing in data centers and such like. And that is not only based in India, but some of these companies also sell overseas. Margins will be a problem. Copper prices have been up, but too many of them, I think, given the fact that there is been a sudden surge in demand, I think the margin picture also will be okay, because you'll be able to pass on most of the price increases, given that it's obvious where the commodities are headed. Net, I think for the near term at least, the demand from power-related engineering and supplies companies is expected to remain fairly robust. The only question you have to look at is whether you want to buy at the valuations that they're trading at, given that there is actually very little entry barrier or technology that is involved in, for the most part, in some of them. There are, of course, companies which are involved in slightly more sophisticated wire productions and so on, which may deserve to trade at a slightly better valuation. But net, I think the sector is still fairly expensive, though growth is a given.
That's your view on wires and cables. Anand, also give us a sense of where do you think the run-up has already happened, and maybe there could be a correction that's due in any sectors that you are cautious on right now?
So I don't want to hazard where the market will do. Market does things which I cannot explain. What I can try and look at is where I think valuations have run up. So for most of the well-known sectors where expectations were high, they continue to remain high, and so far they continue to deliver. So as I mentioned just now, power is a clear winner there. Most of the power and supporting infrastructure is doing quite well. Autos also, to my mind, have actually run up quite a bit. Auto ancillary somewhat are a little more insulated because they also export. But by and large, they are also not trading at something which gives you a lot of valuation comfort. The surprises, as I said, in this earnings have largely been in the consumption space. And therefore, you may find a few winners if you dig deep enough, and which are not directly FMCG or consumer durables kind of things. And that is probably the only place where I think valuations may, aside from banking, be relatively cheap. The banking space, of course, has not been doing well from a stock market perspective, but has continued to perform very well. At some stage, I think that is something that one will be have to come back to whenever the foreigners return, because they are the ones who tend to lead with the larger cap companies.
Okay, what we'll do is slip into a very short break. Anand, Rajesh, be with us. The cash segment has started, and we'll give you, the viewers, an update with regard to how that's playing out. We'll also give you Anand's view with regard to this new mechanism of market close. We'll talk a little bit more about all of this on the other side. Stay with us.
Back with closing trades, and let's put the spotlight on some of the earnings candidates in the last 30 or 40 minutes. One of them is Zydus Life, has reported a mixed first quarter, but the street is clearly giving this stock a thumbs up. Let's pull up the stock price of Zydus Life and take a look at what's happening over there. Because while you've got the revenue that's risen 22%, you've got a cut coming in on the bottom line to the tune of about 36%. But the stock is higher by about 6.5% and continues to do well under cash as well. Let's take it across to Meryl, who's here with the number breakdown and how the quarter shaped up for Zydus Life. Meryl.
That's right, Snehi. So, as you've seen, the profitability for Zydus Life Sciences in the first quarter has definitely come under pressure. PAT is down by almost 36%. But what seems to be driving the stock, first of all, is the strong top-line performance. Revenues grown by 22%. But other than that, India formulations for the company has grown by 20%, which has outpaced the rest of the market. Zydus has also outperformed the domestic pharma market across key segments such as chronic, acute and super specialty segments. International markets was another bright spot for the company with revenue up 34%, with consumer wellness business surging up to 67%. This has now in the first quarter contributed up to 18% of the company's total revenues. And in the US, while revenue was down 3% on a year-on-year basis, the base business actually gained market share through volume growth as well as new launches. On top of this, the company also launched its very first US biosimilar and completed the acquisition of Assertio Holdings, which has strengthened its specialty pharma's presence. Now, looking at why the profitability has come under such pressure, this seems to be clear. The company has reported an 8% of R&D to sales. That's a 642 crores in R&D spend that they've done in the first quarter. They've also spent around 585 crores towards organic capex in this quarter alone. So despite the 36% depression that we're seeing in the profit number, the street appears to be focusing on the strong growth in the company's overall business across its geographies and high value segments, and also the heavy investing that it's doing into its future growth as well.
Okay, thank you so much for that, Meryl. Rabinder here also with Finolex Cables. Those numbers were also quite strong. Rabinder, what contributed to the strength in terms of the numbers?
Well, as Finolex Cable reported a very strong set of number in the quarter gone by, with the revenue uptick of approximately 53% on a yearly basis, and Street was estimating a revenue of rupees 162 crore, and company reported actual revenue of 249, and the revenue growth was mainly driven by the strong growth in the company's electrical cables and communication segments, as company's electrical cable revenue grew by 47% on a yearly basis to rupees 1767 crore, and communication also saw segment also grew by more than 62% on a yearly basis at rupees 176 crore. And if we talk about the margins, then company's margin has expanded from 9.8% to 12.2% in the quarter gone by. And if we talk about the FY27 margin, then in Q4 con call, company has said that the FY27 margin is expected to improve as higher input costs are passed through, and preform integration could provide a 5 to 10% cost advantage when stabilized. And on the capex front, FY27 capex plan is around 300 to 200 crore for the new capacity and 100 crore for the optical fiber expansion. And on the management also highlighted that communication is the key growth drivers for the company as fiber prices are recovering. So overall, it was a strong quarter for the Finolex Cable in the for Q1 FY27.
Okay, Ravinder, thanks for taking us through that. Just taking a look at how the cash segment is shaping up right now. We've got about 4 minutes till that segment comes to an end. And some of the biggest movers from the cash segment right now, Jubilant Pharma is up about 3% since 3:15. RR Kabel is up 1.5%. Eclerx is up 1.25%, as is the case with the Kalpataru projects as well as the Chola Financial. In fact, on the flip side, what's taking the biggest knock is Balrampur Chini in the last 13 odd minutes. That stock is lower by about 3% on the back of its earnings. Remember, in the spot also, the stock saw a little bit of a knock as its earnings came out. Minda Corp is the other one, 1.5% lower, as is the case with NLC India as well as DLF. These are some of the top movers in the last 10 to 12 odd minutes. But we were speaking of wires and cables. We've discussed that on the fundamentals. Before that, Meryl was breaking down Zydus Life's numbers for us. Anand, your view on pharma, how are you looking at this segment? Because, we've got themes like GLP-1, then you've seen CDMO play out its run. Do you believe that there is still more leg room for some of these themes? And do you believe structurally pharma is a good space to be looking at right now?
Okay, I think there are more than $200 billion worth of goods going off of patent in the next few years, and that gives you a very strong pipeline for complex molecules to be made in India. Many of the companies are looking at biologics and so on to expand their portfolio. So I think you will see that both with the regulatory push coming from the US of putting tariffs, and the fact that there is now a larger portfolio again available of off-patent drugs, the Indian pharma industry should be moving up in terms of more complex molecules that they are making. Challenge, of course, always remains the API, which is imported from China. But there again, because of the schemes of the government, there is some incentive now to actually integrate backwards as well. So I think from a purely business perspective, it's a very sweet spot for the industry in general.
Okay, and Rajesh, what is your take with regard to pharma in particular? Any top picks within the pharma basket that you're liking?
Yeah, we remain positive on pharma and healthcare space. One of the strong performer has been Divi's Life, and today as well we saw a continuation pattern flag breakout. So possibly Divi's can head to further towards 8800 to 8850 levels. So it buy on the kind of counter performer, and possibly 8850 to 8900 can be expected in the near term.
Okay, that's on Divi's Labs. It's almost the closing of the cash market. It's a 0.5% trim coming in on the Nifty. 24,450 is where we're at. Although IT continues to do well, the Nifty Bank continues to be under pressure, lower by about slightly more than 0.5%. And mid-cap under pressure, small cap continuing to hold on to gains. So that's the kind of move that we've seen. And the India VIX has cooled off by 3.25%, at least in the cash market for now. So that's the trend that we are seeing. Just taking a look at some of the outperformers from the broader end of the market. You've got a good move coming in on Finolex Cables, Chennai Petroleum, MRPL, Gland Pharma, Amara Raja. Amara Raja seems to be an interesting one. Can you give us your view on the charts, Rajesh, on some of these battery stocks like an Exide and Amara Raja perhaps? How are they shaping up?
Both the counters looks good, especially if we see Amara Raja battery. It was down yesterday, but there is a strong traction today, and it has surpassed its February swing up. So technically, there is a cup and handle pattern, and over a period of 2 to 3 months, the prices can move towards the levels of 1050 to 1100 levels. So any dip towards 950 can be bought in Amara Raja. Similarly, if we see Exide, I mean, it has been in a vertical rally. Today it was a bit flat, but overall remains a bound dip. Any dip toward 470, 475 can be bought, and in the near term, possibly 510 to 520 can be expected.
Okay, interesting. I wonder, Anand, what you make of this entire mechanism of market close, the new one under CAS.
I think it is a little early to comment on it because there are so many changes that it is becoming difficult to figure out whether or not the liquidity will increase. So in theory, I don't see too many issues with the kind of mechanism that has been put in. Practically, there are some problems. It seems some brokers are not able to see the prices at which the auction system will match. There is also the fact that there is not yet enough generation of orders to take care of this advantage between the fluctuations between the cash closing and the F&O closing. So I think you'll have to give it a little longer for it to actually work and see how it goes. For now, obviously, it has created some disruption and a reasonable amount of uncertainty. The one positive you can take away from this is that people have to now make sure that they kind of close their positions before 3:15. Otherwise, they are exposed to unnecessary volatility on the last day, and that is not bad for the market because carrying forward everything and it actually opens you up to much more risk than people seem to understand.
Okay. And your take, Rajesh, very quickly.
So, we are a very in early days. We have to see how the liquidity works. It's markets are getting better if we see in last three sessions. So liquidity remains a main concern, especially for the low liquid counters. But as we move ahead, maybe we'll get better and better.
And here's hoping for that. We're going to take a pause in that conversation, take a look at the Nifty 50 earnings so far. They've largely been in line with expectations, with results from 46 of the 50 companies out. Consumer services, consumer durables, auto and capital goods are driving revenue growth. And at the other end, you've got FMCG revenue that's up just 1.3%. Ashesha is joining us with a roundup of how this earnings season so far for the Nifty companies has been like. Ashesha.
Well, yes, 46 on 50 Nifty companies have already reported their numbers, and let's take a look at how the scorecard looks like for those 46 companies. We have broken down those 46 companies into sectors to get a picture and to get a sense of how sectors have performed in the quarter gone by. So 46 out of 50 companies have reported the numbers, 20 have been above expectations, 9 below, 13 in line, and 4 companies have reported mixed set of numbers. Let's get into the top 5 sectors which have reported highest revenue growth in the quarter gone by. At the top end, we have consumer goods, we have auto and auto ancillary and capital goods. All of these sectors have reported growth anywhere between 25 to 120%. Oil and gas and consumer durables have also reported 20% plus revenue growth in the quarter gone by. Those are the top 5 sectors which have reported highest revenue growth. Let's also put the spotlight on the other end of the spectrum, the top 5 sectors which have reported slowest revenue growth. And at the bottom end of this, we have FMCG with a revenue growth of about just 1.5%. Other than that, we have healthcare, we have construction, power and financial services with revenue growth in single digit ranging anywhere between 4% to 10%. Let's shift focus to EBITDA and profitability metrics then, and top 5 sectors which have reported highest EBITDA growth. At the top of that list, we have consumer goods yet again, consumer durables, metals, financial services and oil and gas. All these sectors have reported 20% plus EBITDA growth in the quarter gone by. But there are a couple of sectors which have reported EBITDA degrowth on a year-on-year basis, and FMCG is a part of that list. 7% EBITDA decline on a year-on-year basis as far as FMCG sector is concerned. Construction at about 3.2%. We have services and healthcare sector which have reported EBITDA decline of about 8% and 14% respectively. So yes, FMCG clearly has been at the lower end of the pyramid, whether it is revenue or EBITDA. But on the higher end, we have consumer durables and consumer staples which have reported fairly decent numbers as compared to the other sectors.
Okay, Ashesha, thanks so much for taking us through that. Anand, give us a quick roundup of how you've seen the earnings shape up so far, particularly for the Nifty pack. Like Ashesha was highlighting, it's been a mixed set coming in from 4 companies about, but more or less, there has been a beat compared to what the street was estimating. Your thoughts here?
If the broader market, especially smaller companies, have done well. However, I think, if you really want to look at where the market is, you still have to look at the larger companies. And for the most part, as I said, other than autos and consumer, the earnings have been in line. That itself is a bit of a relief because by and large, you start the year with a 15% earnings expectation growth, and then that slowly tapers down to single digits. This year, at least, we have not seen that happen so far. Whether it will happen in the next half is still a question mark, but I think for now at least, it is looking quite good. Commodities will continue to play a good role. The quality of earnings, therefore, to some extent, is worse than what it has been historically. You are being led more by global commodity prices and so on. I think that's another trend that will likely continue. For example, I expect to see oil prices stay elevated far longer than the market perhaps is anticipating. And therefore, you will have benefits from the fact that companies like in refining, etc., will benefit both from the fact that there is now a shortage of refining capacity globally, and therefore marketing margins are up, as well as the fact that because crude is up, and unless the government comes in and restricts your pricing power, you will be able to make a reasonable margin on the refining. So those kind of companies, I think, will continue to do well. I expect second half to be reasonable, at least for the next 2 quarters, because of the consumption growth that is likely to happen. Assuming all this, of course, assumes that there is nothing new that happens in the global markets and no new threats come through. So by and large, the scenario is reasonable. Valuations are still on the higher end, so that doesn't give you too much on the upside. But at least for now, there is no particular reason to be negative on the market overall.
Any way to tactically play this, Anand? We are seeing gyrations on the Nifty, by the way. We'll talk a little bit about that. But any way to play any of these trends that you're talking about? Higher crude, how much of this is already priced in? Also, I'm guessing higher metal prices as well is what you're penciling in.
Well, metal prices perhaps not so much, but yes, higher. Of course, I'm talking when we talk about metal, we talk about.
Okay, we've lost the feed for Anand. We'll get him straight back, and we'll talk a little bit about that with him, how to play that tactically. Let's talk about cash, and let's talk about the moves that are playing out given the cash segment, which is live as we speak. The Nifty is flat though, absolutely flat through this cash segment, through the last 20 minutes or thereabouts. In terms of the big moves, I'll just quickly cover them first. Asian Paints up around 0.5% or thereabouts in the last 15 to 20 minutes. BEL is the other one, which has been a decent mover over the last 20 minutes or so. And so is Eternal. Eternal is now up 2.5% for the day gone by, and 0.5% higher in the last 20 to 25 minutes. So those are just some of the movers on the Nifty index. Let's also, if we can, pull up the Nifty and try and see and break down as to what's playing out on the Nifty itself. There you go, flat move on the Nifty in the current segment. Let's go back to Anand. Anand, please go ahead. Give us a sense. How do you play this tactically, and the view on metals?
So, I mean, the best way of playing it is to actually buy the commodities, right? I mean, buying it through companies becomes a problem because each company has their own quirk. So the best way is to buy the commodities. And if you're looking at companies, unfortunately, in India, as I mentioned, oil and gas is a regulated sector. Steel is controlled by, steel prices are controlled by the tariffs that the government puts in. So those are well-protected sectors and can continue to do well. But most of the larger companies have exposure overseas. So as a consequence, the global market does make an effect. So therefore, the better way, if you want to play directly, is to buy the international companies or the international commodities directly. One thing that one has to keep in mind is that there is likely to be a major shift in the way the Fed, US Fed, deals with its size of the balance sheet. And if that were to come through, they have put out a paper and a research report in the past about how they would like to shrink it. Then some of these issues will come to the fore of tightening market and liquidity. We've already seen what that is doing to what's happening in Japan and versus US dollar versus yen, where the central banks are unable to stop the flow of the market. And therefore, you may find that market tightening may actually upset many of the carry trades even further going forward, given the differential that we have between the Indian interest rates and the international interest rates. Aside from that, there is nothing much that I see, which will cause a major, which will rock the boat a lot.
that note, Anand, I just wanted to get your view that, we're in the last week of earnings. Once the earnings are done and they're digested by the market and we're beyond that, what do you think the next trigger could be for the market to grow from here, if at all that's something that you're seeing?
It needs to trade every day, so it will find some reason for it to go up and down. And you can talk about El Nino, or you can talk about the Iran war and or some other event or the other. But the fact of the matter is that what we are looking for is overall long-term earnings growth. And that doesn't change necessarily on a day-to-day basis. So there's enough for the news anchors to talk about. I don't think from an investment perspective, you need to look at every gyration of the market.
All right. Anand, thank you so much for coming in, giving our viewers that perspective. Really appreciate you taking out the time.
Thank you.